In focus today is cocoa manufacturer Guangchong. M Research says the stock is a buy and revised its fair value estimate to 3 ringgit 40 sen from 3 ringgit 12 sen. The counter closed at 2 ringgit 73 yesterday. According to M Research, the 3 ringgit 40 sen is based on unchanged price to earnings ratio of 15 times 2022 estimated earnings per share. The research house raised its earnings forecasts by 16% for 2021, 3% for 2022 and 1% for 2023 for housekeeping purposes. It says it likes Guangchong for the company's overseas expansion plan prospects, as it gives it an opportunity to tap into Europe, the world's biggest chocolate consumer. At the moment, the stock is trading at an undemanding valuation of 12.3 times price to earnings ratio 2022 earnings per share, compared with the Bursa Malaysia Consumer Product Index's historical average of 19 times price to earnings ratio. M Research says Guangchong's 2022 strong earnings growth will be underpinned by, among others, the normalization of EBITDA yield, now that the industry has better clarity over the impact of the living income differential to cocoa bean price. Demand for luxury segment chocolate is also expected to gradually pick up pace, and this should augur well for cocoa butter's average selling prices. Meanwhile, Guangchong's bean grinding facility in the Ivory Coast is on track for a first half 2022 commissioning, so it will be seeing maiden earnings contribution from the plant. With a 60,000 metric ton capacity in this first phase, M Research says the facility should contribute an additional circa 70 million ringgit to the company's EBITDA per annum. Downside risks: slower than expected recovery of the tourism industry, high volatility of cocoa bean price, and elevated logistics cost. So what's the consensus? According to Bloomberg data, there are 3 buys on Guangchong. Average target price 3 ringgit 61. The stock ended trading at 2 ringgit 73, so that's a potential gain of some 32%.